So I started the recording, and again, I deeply apologize for starting the session a bit late. This is happening for the first time that we are getting late, but again, so without further ado, let's start it. So guys, I welcome you all on behalf of IAA. So today we are going to have a session by Gaganpreet Singh Kalra from PRM 23, and he'll be talking regarding beginner's guide to financial strategy from trading to investment. And the moderator for today's session will be Pratik Kala. He is from PRM 23, and Aniket from PRM 32. So I request Pratik and Aniket to, share a bit about our speaker, and then we can start with the topic.
Thank you. But again, as I said, I cannot see anyone. I can see just a blank screen. People can see me?
Yes, we can see you.
I think Aniket, everybody can see you. Don't worry.
Right.
You just go and
Right.
you're doing a mock practice. वैसे करके शुरू हो जाओ.
Right. It's like my podcast. So thanks a lot, IAA, for giving me this opportunity, and thanks, Gagan sir, for choosing me as one of the moderators. I'm really honored and very thankful that I'm having this opportunity to interact as well as host. With me, I have Pratik sir. Pratik Kala is from PRM 23, a batchmate of Gagan sir. Again, he is a seasoned banking person for the past 19 years. He has worked in various domains, be it business development, be it strategy, be it product management, and across verticals, be it SME, rural, agri, and at present, he is handling the entire digital initiative of Yes Bank. But I want Pratik sir to say a few words before we move to the OG of IRMA's finance, Mr. Gagan Kalra. So, Pratik sir, can you just share a few words about you?
Yeah, thanks, Aniket. Yeah, happy Gagan is there, the batchmate, and it's really nice to host the batchmate on an investment talk. I think which is very important and pertinent for us people, which we will be talking with Gagan. So, Aniket, thanks for moderating and co-hosting this. And I think people are very much interested in listening to Gagan. So I think you can introduce Gagan. Everyone knows him, and I know him personally. We have shared the fieldwork, villages together, and then we have been in touch with Gagan. On and off, we have been regular in touch with them. So I think Aniket, you can introduce him, and then we can go straight with the talk.
Right. So Gagan sir, I mean, in the circle of IRMA, who are a bit interested in the investment space, doesn't need an introduction. You must have heard of Oracle of Omaha. I mean, for us, Gagan sir is the Oracle of IRMA, right? So if any people who are watching us, listening us, if you are on that IRMA investment group, which is on WhatsApp and Telegram, then you know who is the OG out there. So it's Gagan sir. I would want sir to say a few things about him, because I mean, I don't want to break that big build up. So sir, can you please say a few things about you?
Thanks, Aniket. I'm simply a mortal human being. जितना तुम मुझे चढ़ा रहे हो. Okay, so I mean, but yeah, I mean, thanks, Aniket, thanks Pratik for the kind words. Really appreciate. I know that it was a last minute request. I came and requested you guys to help me with this session, and you have taken out time from your busy schedule. I know Pratik is traveling. I know Aniket has been doing his month ends and still finding time for me. So really appreciate that you guys could find time. And it's been a very simple and obvious choice, Pratik, because as he rightly said, he's very close to my heart. We have spent some good moments together in IRMA and after IRMA as well. And Aniket has been, that sort of a guy who would come to me every now and then, sir ye kya karna hai, sir wo kaise karna hai. So he's always been there, always discussing things once in a while. So the choice was very obvious in terms of if I wanted somebody to discuss this with me. So it was a no-brainer. So thank you guys, thank you really for taking out time. And I can see that people are still joining on a Saturday evening, which means they see some value in this. So I thank all of you for taking out time. I know you have a busy life. I know that you are looking into a lot of things and still making out time for this talk. So thanks once again. Just to set the tone for the discussion today. Sorry, if somebody is not on mute, may I request if you can go on mute? Thanks. So just to set the tone of the discussion, I know everybody would have their own expectation of what they want to listen from this discussion today. But I have tried to keep things very simple, very basic, because I am not sure what sort of audience we're getting today. So I didn't want to make it too technical. And thankfully, both Aniket and Prateek have every sort of every time when we sit down and discuss what should we do, they have made sure that one thing is consistent: basic report. So that's what we've done. We've kept it very basic. We're trying to build, I mean, the intent is very clear. We're trying to build the foundation of financial acumen within IRMAN, so that this becomes interesting for you. Once it becomes interesting for you, then obviously you can join multiple WhatsApp and Telegram groups. You can have your own sort of pace to understand what you want to do. And obviously, you can reach out to me, anybody else who you think is able to help you in the strategy which you want to pursue. So without further ado, I'm sorry, I think it says the host has disabled screen sharing. So we'll have to, yeah, sure. So Shruti would let me know, right, once it is enabled?
Yes. Just give me a second. Actually, today
Sure.
there's something wrong with my system.
No worries. Take your time. Can you let me know if my screen is visible now? If anybody can.
Yes, Gagan, it's visible.
Okay, perfect. So now I'm just looking at my screen. I'm not looking at the tiles. So I'll just go on. And if anybody has a question which you want to check at that point of time, maybe you can leave it in the chat, or maybe you can stop me there, and then we can prep on for that. You will see that what I've.
So Gagan, hi Pratik here. Can I suggest something? That you flow,
sure.
you go with a presentation, and then maybe as a moderator, if I have a question, and then later on we keep it as a Q&A session, so that you complete your presentation, and then we have a Q&A.
Perfect. I think that makes sense. Yeah. If that's okay.
Okay.
What I've done is that I've color coded the slides. I will when I'm talking about the flow, I'll be talking mainly on the slides which are white background. The ones which are in the gray background, I will not touch upon them, because these are additional material which I've just kept in the presentation. And if anybody's interested, you can reach out to me. I'll mail you the slides. You can have a look at your own pace, research, do whatever you want. So here we go. Okay, here we are. Now, I think as the topic says, that this is basically for beginners. So, I mean, the whys are very important. Why do we need strategies for beginners? Now, I think when we talk about beginner, what I actually mean is somebody who is starting their career, somebody who is fresh out of IRMA, or, who has been working for some time. He or she is a beginner for me, because, they have just, started their work life. They might have some obligations, mainly, education loans, whatnot. So why is it important for them? I mean, that is a stage when you've just started earning money. You've just started, seeing the color of green, and, you would want to, first of all, look at your, based on your background, you would like to look at obligations which you want to clear. And then whatever surplus you have left, you will want to, use it for disposable income. It could be buying a car, going and buying some other asset which you think. But I think, at that is the best time when you need to start strategizing of what you want to do. So I think, this slide basically covers why should one strategize. You have to build wealth, and nobody should, ignore the power of compounding. So that's what I've tried to harp upon in this one, that, the sooner you start is the faster you will look at financial independence. And then, you obviously will start looking at, what are your risk allocation strategies. I'll speak about them later, but just setting the tone here, you will start looking at your risk allocation strategies, then risk reward ratios, how to manage the risks of assets which you want to, pursue and all that. So that's why, that is the base of why you should start looking at your strategizing for your finances as early as possible, actually. Now, as I said earlier, this is a great slide, so I'll not spend much of a time here. But yeah, these are the commonly used strategies people use. You will start creating budgets. I don't have to tell you what budgeting is. You will start creating funds for your emergency sort of, buffer. We can get into definition of is 6 months enough, is 1 month, 1 year enough. That's a definition discussion we can have, but the bottom line is that you need to have an emergency fund, which should be there. How do you manage your debt, home loan, credit cards, etc., etc.? And then end of a day, diversification, basically saving versus insurance versus investments. That's what it is all about. So I'll not get into specifics of each of them because we'll be covering them in the later slides. But if you see now, so we're talking mainly about diversification, because that's what I think everybody is today interested in. If we were to talk about diversification, what is the golden rule for anyone? The golden rule is, what is my risk appetite and what is the return I'm expecting on that risk, which I want to take? And it's a no-brainer that if you're looking at a low return, obviously, if you're looking at a low risk, it comes with a lower return. It's a simple sort of a discussion to have that, should मैं पैसा FD में रखूं या मैं पैसा equities में लगाऊं, because the risk associated with either of the investments will also, at some point of time, give you the definition of returns you should expect from them. And obviously, the beta of investment will vary in a low risk environment versus a high risk environment. So every individual has a risk tolerance level which he or she can work with, and it's got nothing to do with age. People generally say that when you start looking at grays in your hair, you should do more risk averse balanced investments versus when you are so young, you should have high risk investments. Look at Warren Buffett. He started investments after he touched 60. So I think that this age has nothing to do with it. It's basically about how much of risk you can take, how much of risk you can digest. And obviously, then again, you have, factors which define your risk appetite. These could be how much of money you have in your bank, what is the time horizon of investments you're looking at, how much of knowledge or, experience you have gained over the years to take those kind of risks. Which is why, some people are more comfortable with FNOs versus some people who are comfortable only doing stocks. And some people who are not even comfortable with either. They will just go and do normal plain vanilla FDs or go and put money in government sponsored schemes. So everybody, and nothing is wrong or right here. It's only about how much of risk do I want to take. उसके सामने मुझे कितने returns expect करने चाहिए, मुझे कितने returns मिलेंगे. It's as simple as that. Okay. Now, when I talk about investing and trading on this slide, I'm not talking about investing and trading specific to stocks. I'm talking about investing and trading as a general term. When you are, because I'm sure you know that we can also do these strategies in commodities. We can do these strategies in fixed income. Now
Gagan,
you have, yeah.
Gagan, yeah, I just sorry to interrupt you. When you said about the risk and return, the one basic question, if you can allow me to ask you, is it's basically pertinent to when you said that the students coming out of the institute, let's say in the IRMAn context, somebody who is freshly coming from passing out and joining his or her career, what is an investment advice you will be giving? The basic thing, because they will have an obligations just like education and loan. So my question pertains to what, with looking at that aspect, early investment advice which you will give to the millennials who are coming out of institute.
Sure. I think it's a very valid question today for people who are either still in the batch or freshly coming out of IRMA. I think first and foremost thing, I mean, everybody wants to be financially independent, irrespective of whether your tuition money is coming from your parents or whether you have taken a loan or whether you are using your own funds because you have savings, etc., etc. Everybody first of all wants to take care of their obligations, which they would have at some point of time because of their studies. So I think the first and foremost thing they should do, if you remember this slide, I was talking about, if you see the point number in 3 in debt management, I mean, I've very clearly laid out, first of all, pay off your high coupon debts and avoid over leveraging. What it actually means is कि सबसे पहले आपको अपने जो भी loans हैं, which are your high coupon debts, you should move them out of your balance sheet. So that should be the first and foremost sort of point which one should look at. And then once, I mean, obviously it is not that, अगर आपकी salary 50,000 है और आपके खर्चे 30,000 है, तो 20,000 आप loan में देते हैं. It's not the right thing to do because you have to also balance out, your emergency funds, your investment funds, etc., etc. So create some sort of a logic that, let's say if you have a starting salary of 50,000 per month and you are spending 30,000 a month, so maybe 10,000 you're using for your, EMIs and whatnot, and the rest you can, work out the cash flows. And the rest of 10,000, I mean, at this stage, creating an emergency fund is too early for somebody who is freshly out of college. So maybe what they should look at is they should start looking at some sort of systematic investment plans. When I say that, I don't mean SIPs or in mutual funds or SIPs and stocks. I mean, again, it's a very large topic in itself, but look at systematically creating investments. Now, again, it depends upon, what asset class you want to do. उसके अंदर, based on your risk appetite, your return appetites, your return expectations, you will start looking at, where do you want to invest. If you are a very simple risk averse investor, तो सिर्फ एक recurring deposit कर दो, जो और पुराने जमाने में जैसे हम बोलते थे RDs कर दो. You can live with that. If you're a normal person who is also exposed to equity, and then you can also look at stock SIPs. Now you have small cases, etc., and whatnot. So basically, it's when you're just starting and you don't have to, think about your sort of retiral income, your gratuities and all that. At that stage, take off the debt from your books, keep your balance sheet clean, start making some sort of small investments for the fact of compounding. And then, as your debt starts reducing and your outflow on that side starts reducing, is when you should start looking at diversification beyond your normal saving plans. That's what I would suggest.
Thanks. Thanks.
That makes sense. Yeah.
Yeah, it makes sense. Yeah.
Now, going back to this slide, when I talk about investing versus trading, I'm talking not only from a stock specific perspective, it is irrespective of the asset class. So what I've done is I've tried to create a very simple sort of a table which tells you what is investing and what is trading. And I want to make that differentiation clear right now, because, you can either be an investor or you could be a trader. You cannot be a part-time investor and a part-time trader, or you cannot be a full-time trader and a part-time investor and vice versa, because these are two very different sort of mental wirings. So या तो आप investor हो सकते हैं या फिर आप trader हो सकते हैं. So one has to, and I can't tell you what you are. I mean, everybody has their own style. Everybody knows what their strengths are. Everybody knows what their weaknesses are. In this slide, I've simply tried to lay it out. How does an investing profile look like versus how does a trading profile look like? And based on that, what are the common characteristics? Now, I mean, we can debate about, the benefits of investing versus trading. What are the technicalities? What is the sort of financial acumen, the discipline required? That's a session in itself. But since we're talking a beginner's guide, so I've just kept it simple, saying, okay, if you are an investor, I think ये headings उल्टे हो गए हैं मुझे जो लग रहा है, because investing is long term and trading is short term. So
उल्टा लग रहा है.
Yeah, you're right. So in trading will be short term, investing will be long term, and then the risk tolerance for trading has to be high, whereas investing you can live with lower risk tolerance, because you look at the time value of money and how your investments will smoothen out over a period of time. And if you look at, I mean, the last row is basically about, what asset classes can you look for if you're looking at trading versus what you can do when you're investing. Now let's maybe deep dive slightly into the respective asset classes. Now, if you talk about stocks, again, taking the sort of, the analogy of trading versus investment. In this slide, I've tried to cover, what are the types of traders versus investors. So, I mean, I think, most of this parlance should be, something which everybody is aware of. One can be a day trader, one can be a scalper, swing trader, positional algo, and you can do, option buying, selling, etc. Whereas if you were a long-term investor, you would be looking at value investing, people who are basically looking at the book value and looking at, if this makes sense for me to buy today, versus people who are just investing for the dividend income. Then there are people who are looking at earnings potential, the PE growth and all that. Then there are contrarian investors, there are passive investors, and now we have thematic investors. So different asset classes also coming into investment based on, your investment style. But then these are the sort of, main types which one would look at when investing or trading. Now, just touching at very high level on the trading. I mean, trading, we talk about, star traders. But if you see that, a person on the street who is basically exposed to a specific industry will have a better hold of that industry. For example, if you are into FMCG, for example, I know that, Aniket is into FMCG. I mean, the kind of trades of the business which he knows, I'm sure, any analyst sitting for any fund will not know. Or for example, Pratik, who has spent 2 decades in banking, will know which bank is doing better in terms of margin, kahan pe log zyada hire ho rahe hain, kahan pe agle 3 saal mein slowdown dikhne wala hai. He may be a better guy to ask these questions versus, any other analyst on the these fund houses. So that, and this example carries on. But then what happens is that, everybody takes this data, all this, what I call this is the noise which we see in our daily life. What we lack as, normal person is that we do not assimilate this data to make a informed decision. Or analysts kya karte hain? They are the ones who will pick up this noise or data from various sources. Now we have fancy names. Now we have something called as scuttlebutt investing. Scuttlebutt investing का कोई मतलब क्या है? Supply chain में dealers के पास जाके बात करो, उनके जो है सप्लायर से जाके बात करो, देखो कि उनका इन्वेंट्री मूव हो रहा है कि नहीं हो रहा, कैश कन्वर्जन कितने दिन में हो रहा है, पैसा कब आ रहा है. एंड वी नो ऑल दिस, आई मीन इफ यू गो एंड सी screener.in पे जाके आप देखते हो कि भाई कैश फ्लो फ्रॉम ऑपरेशंस कितने दिन में आ रहा है, कैश कन्वर्जन कितने में हो रहा है, सेम लॉजिक. बट व्हाट यू आर डूइंग इज दैट यू आर जस्ट एक्चुअली वॉकिंग ऑन द स्ट्रीट, going and doing it as if you were doing it for your own business. So the point is very simple. When you're trying to assimilate the data and make an informed decision, whether the numbers really tell you what they are or it's something else. So that's what these analysts do. And if any one of you starts spending time and energy, you can beat any analyst on any given day. So trading is not rocket science. It's very simple, very practical. You just need to make sense of data in front of you. Which is why the third point here, do not ever do trading in a business which you don't understand. You will always lose money. Even if insider trip, you will still lose money because that is an industry you don't understand. And here what I've done is, I've tried to basically create 2 headings of trading. एक जो वो होते हैं कि जो सारा दिन स्क्रीन के सामने बैठे रहते हैं. So these are the guys who scalp, these are the day traders, these are the swing traders. और एक वो जो होते हैं हमारी तरह के लोग जिनका फुल टाइम जॉब होता है, वंस इन अ वाइल ट्रेडिंग करते हैं, जिनको जीरो दाम में जीटीटी लगा के रखने की आदत होती है, या फिर वो अगर एफएनओ करेंगे तो वो ऐसा करेंगे कि पोजिशनल स्टोर्स पोजिशन लेकर के चले. सो these are the sort of traits of people who would be doing trading primarily. Now, in terms of investing also, I think gone are the days when, buy and then, hold. Wo abhi, we have seen that, earlier the cycle of investments used to be in decades. You would talk about buying a stock and holding it for 15 years, 20 years. फिर वो धीरे धीरे कम होकर के वो 5 years, 10 years ago. And now we see that a cycle comes in every 3 to 5 years. So basically, if you are there are still success stories of, stocks like HDFC Bank, Biocons, and Britannias and whatnot of the world who have become multi-baggers. Thanks to Peter Lynch, now we have a term for that. But There are also stories where people have actually lost money for holding those stocks for years to come. So buy and hold is not the only strategy now, I would say. I mean, it is still a strategy, but it's not the only strategy now, at least for investing world. You will see that people will now look at diversification. Somebody will do thematic sort of investments. Somebody will say, okay, I will do sectoral investments. Somebody who will say, abhi aajkal, people start doing these SIPs and ETFs, index funds, which is all fine. I mean, as long as it suits your style, you should look at that. Then you have this cost averaging approach, जिसको कि हम stock SIP बोलते हैं. मुझे हर महीने 10,000 इन्वेस्ट करना है. मैंने 2-3 स्टॉक पकड़ लिए. Let's say I've taken Reliance, HDFC Bank, and I've taken Tata Steel. मुझे यही 3 स्टॉक्स में 10,000 हर महीने लगाने हैं. क्यों लगाने हैं? Because I think these stocks will give me higher returns in next 3 to 5 years. So it doesn't matter what is the price of the stock on 5th of every month. I will close my eyes and I'll buy it. So what you're doing is that you are actually creating a sort of stepped up investment. Now, on a given day, the cost of Reliance could be 2,000, Tata Steel could be 700, HDFC Bank could be 1,500. The next month you will have different numbers, but you're not concerned with that. Why? Because you think that in next 3 years, your average cost of buying these shares would be somewhere around. For Reliance, it will be 2,300. For HDFC Bank, it will be 1,700, and for Tata Steel, it will be 800. And you're okay with that sort of a cost. And which is why then you will say, "Chalo, this is my cost of, having that flexibility." And accordingly, what you are doing is that you're basically creating a buffer that, चलो अगर कल को 3 साल के बाद Reliance अगर 3,000 के ऊपर जाता है, so I make somewhere around, $800-900 and so on. Then you have basket investing, which is now famously known as small case. People create baskets of their own choice, or people basically, आजकल काफी websites and apps also create their own baskets. You can just pick and choose one which is of your liking, and then you can start doing either a lump sum investment, or you can start doing a SIP in that. And then value investing is basically looking for stocks which are trading below their value, so that you can make some delta once the price goes above the value. I'll skip this because this is more theoretic, but yeah, I mean, what's fundamental analysis, what you should look at. And here what I've done is, I've tried to create some bullet points of what a value investing as per Benjamin Graham is, and what a growth investing as per Jim Slater is. Jim Slater was a hedge fund guy from UK, a very famous one. They have created these 2 criteria. I'll skip that part because, that's very, very sort of, specific to that discussion. But if anybody's interested, you can discuss with me offline. Now, what I'm doing here is that beyond stocks, I've tried to create some sort of a list of various products which you can look at. For example, in fixed income, what are the categories of products one can look at? You have old school FDs, savings accounts also give you, I mean, these days savings accounts can give you returns from anywhere between 4% to 7% and beyond, depending upon which bank you go to and what is their ALM situation. So still a good offer. If you think that, you are okay with them from that sort of returns, then you have RDs, then you have government saving schemes, you have small saving schemes. And now you also have, retail participation in debenture and bonds is also happening through various platforms. So these are basically the sort of products which you will look from a fixed income perspective. If you were to look at another asset class, which is real estate, I mean, the first one is a no-brainer. You can simply go and buy an asset, be it a residential or commercial. You can also go and invest through REITs. There are a lot of mutual funds and ETFs which have real estate as their basis. Then you have these sort of crowdfunding platforms like Strata, Property Share, which give you fractional ownership of that real estate. I mean, if you're a beginner, I would suggest don't start looking into these fancy things. Keep life simple. Another way to look at real estate is that you start investing in companies which are exposed to real estate, like for the likes of, Godrej Properties, DLFs, and whatnot. There are a lot of marketplaces who are also offering fractional real estate like RIP and all that. And then, if you are an ultra HNI, you will not be sitting here and listening to me on a Saturday evening. But if you're an ultra HNI, then you can also look at, real estate focused AIFs as an asset class. Then you have another sort of, long list of other alternative investment platforms which you can look at. P2P, I think everybody is exposed to what P2P is. I've just dropped in some names which can get your mind thinking about these names. Then you have mutual fund investment platforms where you can do lump sums and SIPs. Then you have alternative investment platforms like RIP and Satik. You have robo advisory, and everything here is from an Indian context. So it's not that I've taken any name which is outside India at the moment. Then you have robo advisory platforms. Fancy term, but what it does is that it just simply creates algos. So it will, first of all, it will give you a large questionnaire, and that questionnaire is basically to understand what is your investment profile. So they try to see what is your risk-taking ability versus what is your acumen versus what is your experience. And then their algorithms will basically put you into one of their predefined buckets. And then that's how they will start investing on based on your money. Then you have gold investment. I've spoken about various forms of gold investment, be it physical gold, digital gold, sovereign bonds, even looking at ETFs and all that in most of the platforms if you have been discussing with me in Telegram or in WhatsApp. But yes, there are also avenues of buying gold from various sources. These days, a lot of people who want to churn their money in 2 to 3 months also look at invoice discounting platforms, and I'm sure most of you know these names already. Another asset class is commodities. And then, something which is now becoming famous in the last 2 years is startup investing, where you see a lot of these syndicates who come to you asking you to put anywhere between 2 to 10 lakhs for investment. At this stage, I think, what I've tried to cover is I've tried to cover very sort of, logic of why you should be looking at investments in terms of, if you are looking at investments, what are the building blocks of investment? And then beyond that, once you start thinking of what to do with investment, and when I'm talking of investment, I'm talking about both investment versus trading. So if you're looking at either of those sort of strategies, then what are the asset classes in front of you? So I've tried to cover that in the first segment here. At this stage, maybe I'll just open the discussion to Prateek and to Aniket for maybe some time if I want to the next one. Or anybody else, if you have any question at this stage, please feel free to ask.
Hi, Gagan. Prateek.
Yeah, please.
Anshul sir, please go on. Should I?
No, Anshul sir, you go on. Yeah, please go on. Hello.
Ajay. Anshul sir, yeah, please.
I think.
Hi, Aniket, can you hear us?
Yeah, I can hear you.
Yes, please go ahead.
Okay, I need to go ahead. Okay, fine. Gagan sir, you talked in detailed about everything, but as a IRMAn who has just started, and or maybe who is have worked for 5 to 7 years, this technicalities might be a bit hard to digest at this moment. If somebody is interested, well and good. But mutual funds is one thing which is in today's time is really promoted by various platforms, as well as the government also does it. And we generally, majority of us takes mutual fund either on our relative's suggestion or somebody who is a distributor, or if we take the next step, we just go on a platform and select something. But I would like to know that, it is easy, is it convenient? But what are the few basic technical parameters that one should follow, and what are the funds one should consider while investing? It might vary from the basis of the investment purpose, but is there any technical point to start with so that a better informed choice can be taken?
Sure. I think, yeah, thanks Aniket for bringing it out. And I know that, a lot of people do mutual funds because it's one form of passive investment. And, typically when I look at, so my logic of doing investments in mutual funds is very sort of, different. I don't look at mutual funds from a passive investment perspective. I look at, I'm of the view that if I have enough knowledge, I should be able to generate returns which any asset manager can make. So why should I pay his expense ratio? Or if there is any specific theme or a segment or investment geography which I don't understand, then I basically look at a mutual fund or a fund manager simply as an outsourcing agency. That's my personal logic. So I will not say that's the right logic for everyone who doesn't understand mutual funds to start with. So I just look at mutual funds as when I want to outsource my investment decision to somebody who is better than me into that. So that is my criteria to look for that. So which means that the first and foremost thing which you should look for in mutual fund investment is who is the fund manager. What are the fund manager's credentials? What is his experience, his or her experience? What sort of schemes, sectors, themes he or she has handled in the past? What is the track record? So, I mean, that becomes number one criteria for me. Now, you use the word technicals. So I will not get very technical here. I will not talk about Sharpe ratios. I will not talk about trainer ratios because, that might not be, people might not be comfortable with those terms. But just for okay, Sharpe ratio means risk edge, a ratio which gives you risk adjusted returns. So just to make it simple, but I will not get into all those specifics here. Let's keep it simple. Now, if I'm giving my money to a fund, right? If I'm giving my money to a fund, so basically a fund is also having a lot of transaction costs, third-party costs to manage my money. How do they take this out from me? Is basically in form of expense ratio. Now, expense ratio. So first thing which I would look for is a fund manager. Then I will look at the second thing which I will look for is the expense ratio which a fund is going to charge me. Now, typically in a fund, there are 3 or 4 heads of how this expense ratio is calculated. So you have the transaction costs, then you have the investors management costs or investor handling costs. Then you have the transaction fees or what we call as the fund charges. And then you have the distribution fees, which you have to give to brokers and you have to give to third parties who bring the money to you. Now, the last point, which I talked about, the distribution fees is very, very important. Now, typically, I mean, when you invest into a fund, you generally see there are 2 types of funds. Either it is a direct scheme or it's basically a growth scheme or a dividend scheme. Now, everybody understands the difference between a growth and a dividend. ये dividend scheme में क्या होता है, अगर dividend declare हुआ underlying sort of investments पे, तो वो आपको cash out मिल जाएगा और आपका जो NAV है adjust हो जाएगा. Growth scheme में क्या होता है कि वही dividend reinvest हो जाता है. Now everybody who at least is exposed to mutual fund knows what is the growth scheme versus a dividend scheme. But people should also know what is the direct scheme versus a regular scheme. A direct scheme is an investment product where you are directly giving your money to the fund without a broker in between. Since you're giving your money directly to a fund, you will not pay the distribution fees. So your expense ratio will come down. Whereas if you're giving through a regular scheme, so there is a broker in the middle who will charge you the distribution fees, and so your expense ratio will go up. So that's something which you should know. And end of a day, it all comes down to how much of expense ratio you're going to give. And people have different names for it. You have entry loads, you have exit loads and whatnot. But end of the day, what it means is, अगर मैंने 100 रुपए लगाए, तो मुझे net of NAV कितनी मिलने वाली है. So you should know about that. And then obviously, performance I've already talked about. What sort of risk you see in that investment? Now, small caps. I mean, today everybody is very on small caps. पिछले एक साल में 30%, 40%, 50% returns दे रहे हैं. Let's talk about last 10 years. What is the return you've seen in small cap in last 10 years? So, that is also something which you have to look at. What sort of risk you want to take? Are you okay with a high beta investment? Do you want to look at low beta? So beta basically means how, so for people who are still new to these terms, beta means how much of variance you see from the normalized returns. High beta means high risk, low beta means low risk. तो आपका risk जो है वो कितना हो रहा है for that investment. And then the last point I will see is कि fund में turnover ratio क्या है, कितना वो बार बार अपने portfolio को churn कर रहा है. Because every time a churn happens, there is a cost. There will be a buy and a sell, which means there's a transaction cost which the fund manager will pass on to me. So that again increases my expense ratio. So these are the 3 or 4 things which I will look at. I mean, I'm giving you a very sort of a high level logic right now. We can get more technical about it, but then if you were to look at fund manager, expense ratio, risk, and turnover, these are the 4 things.
I think one more thing. I mean, I'd like to ask you, because as you said, you should know about the fund manager, but as a novice or somebody starting, maybe that much of information collection or filtration of that information might not be possible. Then how about looking at the AMC size, that what is the corpus it's handling, and since when this fund is going out, as well as the average returns. If somebody sees these
Hmm.
three things, will it suffice over a
Sorry,
historical
come again.
time? I'm
Come
saying
again.
that
Come again.
if I have to know about the fund manager or the fund as such, then seeing the asset management size, AMC, what we called, right? The time frame this fund is running, and what are the average returns which he had given from the past 5 years. If we look at these three major overheads, will it be a good point to start with?
Yeah, I think for somebody who's very new, I think these could be good sort of credentials to look at कि कितना AUM handle किया है, क्या track record है and all that. I think that's a good thing to start with.
No. Okay, fine. And alpha and beta, as you rightly said. So
Exactly.
fine, sir. So basically, somebody starting with mutual funds, I'll just repeat: AMC, time, average returns, type, whether you want to be in large cap, small cap, mid cap. That's your choice based on your personal risk profile. Alpha and beta. I mean, how much it will move if the index against the index. That's what you mean by alpha and beta, right, sir?
Yeah. So that's beta. Yeah.
So
Now
Gagan, hi, Prateek. Yeah,
Pratik.
just to add, I think there are various sites like Value Research or Morningstar, which gives the ratings of the diversified small. And will that help people in making their study
Hmm.
useful? That last 5 years, 10 years track record. Will this help the investor in identifying the mutual fund as per the,
I
because there
yeah.
are
Yeah. I myself do that. Once I have identified the theme, and once I have identified, who within that theme, which fund managers I would want to look at. So then I will look at money control. I'll go to value research online. I'll go to ET Money. I will see their sort of schemes which they are handling. Sometimes I also go and look at fund houses. For example, Pehle Axis was very sort of in focus because of their returns. Now Parag Parekh and Motilal Oswal for last 1 year have been giving good returns. So I also look at various schemes of the fund houses to see ये लोग क्या different कर रहे हैं. And then I go and see I go and even drill down into what sort of stocks they are buying. So I'll go and see अच्छा अगर इसने let's say if he's doing a small cap, so why is this guy giving a 45% return versus an ICICI scheme which is giving a 33% return or a 35% return? What stocks are different? So I will also go and see that. So obviously these things help you once you have made up your mind of what you want to look at, instead of other way around. So if you have already made up my mind, okay, this is what I'm looking at, this is my theme, these are the fund houses or the fund managers I want to look at, then I go and start validating the data instead of doing it other way
oh,
around.
yeah. Thanks, Gagan. There
Yeah,
are some questions in the
I
chat
saw that.
box.
I saw that. Maybe
So
what I
should
will do is I will take those questions at the last. Otherwise, we might
okay.
go
Yeah.
beyond the time. We are anyways 2 minutes away from the
Yeah.
allocated time, so I will have to rush through my last part. But let me just take it as fast as I can.
Yeah.
I'll take the questions in the last segment. Yeah. Okay. So risk management. I think why is risk management important? From the perspective that obviously you don't want to lose your capital. You would want to define how much of risk you want to take. If you are a long-term investor, then the right word for it is value at risk. If you are a trader, then the right word for it is stop losses, and how much of sort of deviation you are allowed by your systems and your sort of trading setups. You would also want to look at risk mitigation, because no sort of investment is easy. No sort of trading is easy. You need to have a lot of emotional sort of discipline, very structured approach to take care of that. I'll skip this part of asset allocation. Maybe then we'll look at the planning part of it. Now, for somebody who's looking at it for the first time, I mean, I would suggest that this is what you should look at. We can talk about what SMART goals are, but in a very simple sort of a way, you have to be very clear of what you are trying to achieve when you are looking at financial strategies. For example, I want this much sort of fund for this purpose in this period. And that's everything which you see in these 5 sort of variables. So you have to be very specific. Your amount should be very, very crystal clear. And it should not be like, okay, I want to buy a house in 10 years. You can't have a goal like that. You can have a goal which says, I want to save 20 lakhs in next 10 years so that I'm able to finance my own contribution for a home. Now that's something which is achievable. It should be relevant. You cannot say, okay, I want to buy 50 acres of land. Now, buy land, but where? What is the price you're targeting? What are the variables you're looking at? Can you really buy a land for 50 acres if you want to? So your goal has to be also very relevant in terms of the context of why you want to make that sort of your, one of the criteria for saving or investments. And it has to be time bound. You can't say, okay, मैं पैसे जमा करूंगा देखूंगा जब मेरा मन करेगा मैं घर ले लूंगा. It never happens. So why these are called smart goals? Because they make you focused, they make you precise, and then they give you a structure to your investments or trading or what you want to do. I think the next one is creating a financial plan. This is the summary of what I've spoken till now. You assess your situation today, then you build your logic of what you want to do. Once you have built your logic, try to remove as much of leverage as you can from your side, create some sort of a buffer, and then start doing investments, because the investments will help you in the power of compounding. And as I said, I've tried to say this multiple times earlier, do not at any point of time digress from what you're doing. And if you haven't understood any of what I've been speaking till now, just outsource. As simple as that. Finally, I think what I want to cover is that one has to be very disciplined. You cannot say, "Shab 3 saal ke baad, I've been good in trading, but I lost whatever I made in last 3 years in 2020 because of COVID. Now let me turn into an investor." You can't do that. Your head wiring doesn't change overnight because you lost money or you made money. So please stay very disciplined in what your logic is, what your approach is, and what your strategy is. These are the mistakes which I have made, which others would have made at any point of time when they started their journey. So what I've done is that I've tried to cover as much of as I could think of based on my own experience and of the experience of people I've been talking to. That, we simply, for example, myself, when I started, I just kept money in my savings account. That's all. For first 5 years of my life, I did nothing else. I never bought anything, no investments. किसी ने उस समय यूलिप चिपका दिया जो आज भी मैं पे कर रहा हूँ, but I'm just paying their annuity charges. So that's not a right thing to start with. And don't try to get into that herd mentality. You find it, somebody calls you, one of your trusted friend calls you, अरे वो deep industries में कुछ तो खबर आई है उठा ले. Don't do that. First of all, do you even know what deep industry does? So first, be very clear that if somebody is giving you some sort of a advice or a tip, first of all, understand what it is all about. Kya karta hai? Is that an industry? Do I want to take exposure in? By the way, deep is into oil exploration. Is that an industry I understand? Is that an industry I want to understand? So do all those research before you start looking at tips or herd mentality, and also see whether is this an asset class or is this a product which I want to look into my investment profile. And if you are an investor, then don't try to say, चलो ठीक है यार, अभी थोड़ा साइड में लूज चेंज कमाने के लिए थोड़ा शॉर्ट टर्म ट्रेडिंग कर लेते हैं, वो जीके कुछ ना कुछ तो टेलीग्राम में डालता रहता है, ट्राई कर लेते हैं. डोंट डू दैट, बिकॉज इट्स जीके या फिर मंडल भाई जो है अपने सुब्रता मंडल है, फिर यहाँ पे राणा लाल लोग हैं, दे आर द गाइज हु सिट ऑन द स्क्रीन एटलीस्ट 1 or 2 hours a day. दे नो वो क्या कर रहे हैं, दे नो कब घुसना है कब निकलना है. They will only put it on the group या तो जब वो डील ट्रेड कर रहे हैं, या जब they will put it in the group जब वो डील से बाहर निकल रहे हैं. You cannot be doing that day in day out. You don't have time for that. So if you do not change your styles, if you're an investor, stick with that. Don't say कि चलो यार कुछ तो टिप आया है ग्रुप में या फिर किसी से सुना है तो ट्राई कर लेते हैं. Don't do that. And one thing is that people don't look at the cost of doing business in this scenario. You buy a stock. When you buy a stock, there is a cost of it. There is a transaction cost. There is a brokerage. There will be capital gains if you sell it within 1 to 3 years. So these are your cost of doing business. These are your cost of sales. Comparison. If I was to compare it with a normal business, these are your cost of sales. So do not ignore them. Your net of returns are net of these costs. Trading don't overtrade, don't go by emotions, don't chase volatility, which are the simple logics which I have been talking about for so long. Finally, I think Aniket had asked me earlier today to put some sort of reading material and some sort of reference points for investing and for trading. So this slide gives you a very high level sort of a list of what you should read, what websites you should look at. And if you're a studious person, then what courses you can do for investments. And the next one talks about trading. And that's all from my side. I know I have overstepped by 5 minutes, but let me just see if we can take a few questions.
Gagan, could you please go to the previous slide, the book for trading?
Yeah, sure.
Gagan, additional thing, if you can cover the asset allocation, which you had skipped.
Okay, I'll first go to asset allocation then. Yeah, here you go. Now, in this, what I'm talking about, basically from an investing and trading perspective, the asset allocation. Now, when I talk about asset allocation, I'm talking about the assets which I spoke about earlier. These were the assets we were discussing here. When I was talking about stocks versus fixed income versus real estate versus alternatives, which includes everything. So this slide basically is an extension of, once you have identified the assets which you understand, which you are comfortable with, then once you also know your own style, right? You're an investor or you're a trader. So, and the base theme of this slide is that, when you're looking at diversifying across asset classes, you have to create again a balance between what's your risk appetite and what's your return expectation. So, there is no one formula to do that. For example, I'm looking at investments, so for me, if I was to take my example, I will look at stocks, but then I would also, when I'm looking at, the risk on sort of a cycle, jisko hum bullish markets bolte hain, when you are a risk on mode, then maybe my allocation would be 80-10-10. So 80 would be equities, 10 would be fixed income, and 10 would be, let's say, another alternative like a gold or something else. But if the markets have gone into a risk off mode, which we see for the last few months, maybe then this 80-10-10 might become, let's say, anywhere between 60-70, and then 15 or a 10 for other asset classes, or maybe even more than 15-20%. So that's how I will do my dynamic risk allocation if I'm looking at investments. Whereas in case of trading, the risk asset allocation is more tactical and it's more inherent, because if I am into F&O and I see somebody get asked questions about, he or she doing F&O. So if I am an F&O guy, so my asset allocation would be completely different from if I am a purely, let's say, a positional trader, or if I am basically doing commodities versus I'm doing equities. So my asset allocation definitions will be completely different. So basically, trading ke andar bhi you can have sub classes of asset allocation, but the base criteria is, once you have understood your sort of risk return profiling, once you have understood the asset which you want to associate with, then you have to create sort of a logic around that. I hope that's something which has helped you in the question. Now I think Swami sir wanted to see that slide. This one, sir, or the trading one?
Trading one.
Trading one, okay.
Thanks a lot.
But you can take these presentations from me, so you don't need to jot down anything, or you don't need to. Sorry, yeah, I mean, I can send you the slides.
I think Gagan, hi Pratik here. I think
Pratik.
Your slides are exhaustive, and I think which cannot be covered in this session. I think if you will share that, then that would be great. People can go through it.
Yeah, I'll just stop sharing my screen now, and then I'll see the chat box. Sorry. I'm sorry, I'm not able to see the chat box.
Should I read it for you?
Yeah, if you can, please. Thanks.
So first question was that you said that if someone is able to assimilate information and use it correctly, then they can beat an analyst. How should one start doing that? And how to start making sense of this information and use it in trading?
Okay. Now, I'll start with the same thing which I have repeated earlier, that start trading with an industry you understand. For example, let's say Pratik asks me this question. So I will tell Pratik, for you to start trading in BNF first. Bank Nifty se trading shuru karo, because you have been exposed to banking and NBFI for last two decades. So BNF mein dekho, because BNF mein kya hota hai, you have different weights for different banks, and then you will start looking at how the industry behaves. Now, within that, if you are a trader specifically, then within the trading also, I will suggest that you have a setup. And I mean, I've shared 5 setups in the past. You can use that as a base for your back testing. And there are different setups. There are setups for day traders, there are setups for positional guys, there are setups for long-term positional traders. So wo sab hai usme. I mean, I'll not get into specifics of that right now. But once you have so start with the industry which you understand, and within that industry, then start looking at sort of a sort of a index or sort of a benchmark which is giving you some sort of a weighted average return or an index equated returns for trading specifically, and then start with some sort of a strategy, backtest your strategy, do paper trades first. And once you're comfortable with your strategy giving you decent returns, when I say decent returns, I mean anything above 65, 70%, 75% is a decent return. Once you start looking at that sort of returns on your paper trades is when you start putting your actual money. So the common theme is start with an industry which because when you are trading, you will also see that the data points which you see in your daily life will give you hints of acha abhi aage kya karna hai. For example, let's say Sudipto Da, who has been in Northeast and who has been exposed to various banks. If I go and ask him, Bandhan Bank kaise kar raha hai, he will have nuances for me far better than any of the analysts available in the market, because he has been on the ground looking at how Bandhan's branches are performing, कौन सी ब्रांच में ज्यादा अभी डिफॉल्ट्स बढ़ रहे हैं, कहाँ पे क्या हो रहा है. So I think the insights which he carry, that will help me take a view कि अच्छा अगले 6 महीने में जब तक उसकी रिसर्च रिपोर्ट बाहर आएगी वो स्टॉक कैसे करेगा. So once you start with an industry, you understand that data which you get from your daily life, because you are exposed to that industry, will actually help you in making money.
Okay. So should I go to second question?
Yes, please.
So Ritvik, it's say I'm doing a data science program from IIT Madras and focusing right now on derivatives, mainly futures and option. Any advice on where to focus on for fundamentals?
Actually, this is a confusing question. If he's looking at FNO and then talking of fundamentals, is he talking about fundamentals of FNO? Is he on the chat right now, or has he left? Ritik, are you there?
Yes, sir, I'm on the chat. So like how to understand, like I've seen like my dad is doing trading and there are a lot of factors and like how to study the charts and how different patterns are there. So
okay, fundamentals of basically technicals. What is that? What you
yes,
mean?
of the technicals, like
Of the technicals.
where to start, right?
Because the strongest sort of starting point is your price action. So price action can never go wrong. So what I would suggest is you start with understanding the candlesticks. Look at the charts, look at the various. And I've also shared a PPT. If you have seen, there was a PPT I made to New York University earlier this month, where I've talked about various sort of fundamentals of technical analysis. आप वो देख सकते हैं उसमें. I've given you some sort of very high level candlestick patterns. I've given you certain sort of trading patterns which are tried and tested, like head and shoulders, inverse head and shoulders, evening stars, cup and handle. वो आप देख सकते हैं. So start looking at that, and then start looking at charts to understand, to see visually, those sort of patterns or those sort of repetitions of candlesticks. Now different people have different sort of time frames to look at. If I'm a day trader, I will look at anywhere between 5-minute candlesticks to 15-minute candlesticks for my trades. But if I am a swing trader or a positional trader, I will look at 4 hours versus 1 day versus whatnot. So that is again another discussion to have. So once you know what's your trading style, then you can start looking at what time frames, and in those time frames start looking at those sort of patterns which we have discussed earlier. Okay. And if you still have questions, reach out to me anytime you have.
Sir, the presentation you're talking about is on the WhatsApp group?
Should be on the WhatsApp group as well as on the Telegram both.
Okay, I'll check that out. Thank you.
Okay.
Yeah. So Gagan, another question where it says, Vivek says that AMCs are operating as separate companies and generating profits on the fund they manage. So they must be paying income tax on the profit generated on mutual fund schemes they manage. So is there any provision that they need not to show this as AMC profit, or this profit not taxed in any way before coming to investors?
So उससे एज एन इन्वेस्टर आपको कोई फर्क नहीं पड़ता ना, बिकॉज आपकी NAV तो नेट ऑफ टैक्स नहीं आती, आपकी NAV तो नेट ऑफ एक्सपेंस आती है।
Yeah.
तो AMC क्या कर रही है अपने घर पे, उससे आपको क्या फर्क पड़ता है? आपको तो ये देखना है कि एज एन इन्वेस्टर आपके हाथ में जो पैसा आ रहा है वो नेट ऑफ क्या है, दैट इज नेट ऑफ एक्सपेंसेस।
बट आई
Okay.
वांट टू नो इज टेक्निकली कि फंड्स को टैक्स देना पड़ता है या नहीं देना पड़ता, वो
एनी
उसकी
AMC
इनकम है या नहीं।
एनी AMC विच इज मेकिंग मनी विल हैव टू पे टैक्स, विवेक। लेकिन एज एन इन्वेस्टर आपके घर पे जो आ रहा है वो नेट ऑफ एक्सपेंसेस है।
पर एएमसी का प्रॉफिट जो स्कीम्स वो मैनेज करते हैं, म्यूचुअल फंड स्कीम दे आर मैनेजिंग, एंड एएमसी प्रॉफिट इज डिफरेंट। तो जो एएमसी जैसे एचडीएफसी एएमसी है, दे आर मैनेजिंग फंड्स ऑफ से 4 लाख करोड़, बट देयर प्रॉफिट्स आर ओनली 1,000 करोड़ समथिंग। So they
दैट्स
are not
बिकॉज
showing mutual fund scheme profit as an AMC profit.
No, that's
So,
because okay, okay.
hmm,
That's because now when you talk about mutual fund scheme profit, what do you mean? जब आपने स्कीम शुरू किया था तब आपका NAV था 100 रुपए का, राइट? आज की डेट में मान लेते हैं आपका NAV है 200 रुपए। आप ये स्कीम पिछले 10 साल से चला रहे हो। अभी इसके बीच में जो आपने 10 स्टॉक्स, 15 स्टॉक, 100 स्टॉक जो भी लिए थे, उसमें ऑब्वियसली आपका इनहेरेंट वैल्यू ऑफ द स्टॉक बढ़ी है, कुछ स्टॉक्स में बढ़ी है, कुछ स्टॉक्स में कम हुई है, इसलिए आपका NAV बढ़ा है। और उसमें ऑब्वियसली उन शेयर्स में मार्केट एक्शन भी हुआ होगा, किसी ने डिविडेंड दिया होगा, किसी में स्प्लिट हुआ होगा, वगैरह वगैरह वगैरह। सो ऑब्वियसली ये जो NAV है आपकी, जो 100 से 200 हुई पिछले 10 साल में या जो भी साल में, इट्स बेसिकली एडजस्टेड फॉर ऑल दोज मार्केट इवेंट्स। नाउ व्हेन एन AMC is showing its profit, it is not showing the profit from this journey from 100 to 200. It is showing the profits because of the various money management charges which it is charging from various people. Now, for example, I was talking about transaction costs. I was talking about expense ratios. Now, irrespective of अगर मैं 5 लाख करोड़ का फंड मैनेज कर रहा हूँ, तो उसके ऊपर जो मैंने एक्सपेंसेस चार्ज किए हैं, उसके ऊपर जो मेरी ट्रांजेक्शन की जो आप इनकम मैंने इन्वेस्टर से चार्ज की है, दैट इज एक्चुअली माई प्रॉफिट्स। इट हैज नथिंग टू डू विद द स्कीम प्रॉफिट्स, बिकॉज दैट इज already adjusted in the NAV. So, which is why I'm saying that the NAV is not net of tax. It is always net of the price expenses which you have paid, and obviously the returns which you see are adjusted. तो 100 से जो 200 की जर्नी होती है, it already covers all the price action which you would see in the underlying stock if you would have bought it yourself.
but in one word, I want to know whether mutual fund profit generated have been taxed or not, because I still feel I am paying the double tax when I am investing in mutual fund.
And why would you think so?
Because mutual fund schemes have to pay, because they are the separate company, so they have to pay the tax on the profit they generate every year, and the NAV which I will make profit on, then I have to again pay as per my tax slab, whether it is long term or short term for me, so I have to
So
pay tax.
ठीक है,
And
आप एक काम करो, you go and talk to the relationship manager in the largest fund which you have. Let's say for example आपका largest fund है एक्सिस में है, ठीक है? आप एक्सिस में जो भी आपका रिलेशनशिप मैनेजर होगा, आप उसको बोलना यार मेरी NAV पे कितना टैक्स तुम लोग पे करते हो। सो व्हेन यू आर गिविंग मी अ NAV, सो मान लेते हैं कि आपने एक्सिस लॉन्ग टर्म इक्विटी में इन्वेस्ट किया था आज से 7 साल पहले, तब उसकी NAV पकड़ लेते हैं हाइपोथेटिकली कुछ 20-25 रुपए थी, आज की डेट में उसकी NAV होगी 115। आप उससे खाली एक ही सवाल पूछना, भाई पिछले 7 साल में इस स्कीम पे तुम लोगों ने कितना टैक्स दिया है और उसका मेरा जो रिस्क NAV एडजस्टेड रिटर्न क्या है, आप उसको ये पूछ लेना।
I will try to know. Yes, sir.
Because see the tax is always paid on the profits which AMC makes.
So
But
Gagan Pratik here, what
हाँ,
I'm getting from Vivek's question is that so it's similar to if I do a stock SIP directly and I'm doing a mutual fund. What he is saying is that stock SIP, if I sell stock, there's a direct gain which I will be taxable for. Is it what
no,
he is
I
trying, if I
understood.
can understand? So
I
so
understood.
maybe
I understood Vivek's question because he has asked me that question separately also. मुझे उसका question
okay.
पता है वो क्या पूछ रहा है. He's
ठीक.
saying that in
So
a investment, when he does an investment through a mutual fund, his concern is that his returns are getting taxed twice. One at the AMC
yeah.
level and second is at the investor level, because once he gets his returns on the fund which he's invested in, he will have to pay tax as per the slab in which he sits. Whereas the NAV which he's getting, which is the returns he's getting, is also tax adjusted. That's what his question is. And that's what I'm trying to explain to him, that in an AMC, the NAV is not tax adjusted, it is expense adjusted. So if at all he's seen this in his return statements from any AMC, then he might need to sit with them and understand why was the scheme level tax deducted net of NAV. That's what I'm trying to explain to him.
Okay. Last question, which is there in that. I think we are running, more than our time duration. It's from Vipin. He says, how to start understanding different thematic funds in terms of written like digital fund or banking listed on platforms like Coin.
I think there is a specific question which Vipin has. Is Vipin on the call or is left already? Because thematic funds is a large discussion to have, and I can have a session on that for an hour separately. But if he's got a specific question around what he's looking for, maybe I can be specific to his query.
Vipin, you are there?
Yes, sir, I am still on the meeting. So, सर मेरे को बस ये पूछना था, जैसे कॉइन के अंदर इंफ्रास्ट्रक्चर फंड है थीमेटिक, तो उसके अंदर पहले तो ए फंड, बी फंड, सी फंड, तो how to compare within those funds के which funds will be best in terms of returns? Maybe someone maybe in recent होगा अभी, but maybe एक होगा जिसका vintage होगा 5 years, 6 years, 7 years का, तो in that comparison sense. और दूसरा ये होगा कि जैसे इंफ्रास्ट्रक्चर के अंदर होगा कि तो there may be investment in steel and there may be investment in housing also, or different. So how to analyze that? मतलब at least at basic level, how to understand that thematic fund itself.
Sure.
So
देखो यार, इसमें मेरी स्ट्रेटेजी क्या होती है, मैं मैक्रोस देख के चलता हूँ. Now if you have been looking at my posts, so last Diwali I started investment in DSP Tiger, right? Now last Diwali I did DSP Tiger is a perfect example of a thematic fund, because when I was doing my research last year, based on whatever reading I did, I saw that infrastructure story will be a good theme to invest in for next 5 to 10 years in India, and we can see that now. We can see that government railway stocks पिछले 1 साल से भाग रहे हैं. अभी last week government made sort of invest this statement ki they will be putting 4 lakh crores in ports. Then there are also discussions of further investments in road infrastructure, blah 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 blah. Now you have to look at it from a macro level. Why is this theme been working since last 1 year? Simple si baat hai ki why do you need infrastructure? You need infrastructure because you want more capital investments to come in, and this is how your country's balance sheet increases. Once your country's balance sheet increases, these sort of investments which are being made in infrastructure will then give you GDP returns. GDP returns will bring in more money, and it's a vicious cycle. So if you see in last 2 to 3 years, India में infrastructure funds were giving you negative returns, not because infrastructure investments नहीं हो रहे थे. लेकिन in last 2 to 3 years after COVID, most of your sort of investments are going into consumption stocks. It was not going into capital investments. So from that perspective, that sort of sector or that sort of theme was available at a good valuation last year, and which is when I started my investments. So the point I'm trying to make is I look at a macro theme first. Those macro theme, then I look at macro data to see, okay, what themes will work. If you ask me today, what is the theme I'm looking at? I'm very clear. My next macro theme is agri commodities. And I will now start looking at, what are the various sort of, and this is basically again 1 to 2 years horizon. So agri commodities is my next theme, which I'm researching, and what to do in that. I will at some point of time start putting in the groups if you're part of those groups. But I mean, macro level पे एक theme से शुरू करते हैं, and then once you start with that theme, then you start looking at sort of data around that theme to see what is available, what not is available. Then you go and do your validation of data, and then you make up your mind. So that's what I do. I hope that helps.
Yeah, and sir, another part is like there are multiple funds within that particular theme. So then even a larger name maybe just started investing in that particular theme. So how to compare those different ABC funds?
Simple here, fund manager. Look at the fund manager.
Okay.
Okay. So I think Gagan, there are what is your trading style? Pooja is asking, and says I wish you cover basics on macros and bond markets whenever it's easy for you. That's from Preeti.
Okay. So I think my
So what is
trading
your trading?
my trading style here, it's very difficult for me to say what's my trading style. I'm an opportunistic trader. Let's put it this way. So, and I mean, on a day when I see opportunities in scalping, I do scalping. On a day when I don't see opportunities in, there are days when I don't even do anything because there's nothing good in the market. If there, so basically, I'm an opportunity guy. I mean, I don't have a trading style. I look at, so what I do is I follow my setups. I mean, वो एक discipline है which I don't, break for whatever reason. Unless the trade hits my setup, I will not take it. So as I've said earlier, I have day trading setups, I have scalping setups, I have position setups, I have swing setups. So I mean, my trading style, if I was to put it in a simple way, until and unless the trade hits my setup, I will not take it. As simple as that.
Okay. Nice, Gagan. I think another is a request for you to conduct session. That I
This
think you
was
can do it.
I think this was, that's what I said, I started the session saying that I know people would have joined this discussion with expectations ki bahut technical hoga. We can talk about, FNO, we can talk about trading, we can talk about, bonds, debentures. But this was an IAA talk, and I was expecting that, people will come from all sort of, sort of horizon of exposure to this industry. So I've kept it very simple. But we keep on having these talks under our investment enthusiastic sort of theme. So from that perspective, you never know. Maybe the next one we do will be on fixed income and bonds in those themes.
And I think I know that this subject is so vast. This is with respect to wealth creation and and it's part of our life. This small session will not help. I think Gagan, thanks a lot. I think we're looking forward for more of such interactions. And I think you yourself have WhatsApp group and Telegram group. That I think you're doing it on your own. I think it was very nice to have sum up in 6, 7, 8 slides, which will help. I think when we will share it with all the members attendees. And I think over to Aniket, to you for the closing remarks.
Well, I mean, it was, too technical and very good for people who asked the questions and who have seen Gagan sir on the group and they were expecting this kind of show. But very well put in, sir, because the terms you were explaining, they cannot be explained in that's what we were also discussing, that they cannot be explained in an 1 hour chat session. They take a lot of time to understand, assimilate, and then finally put them to practice. But very well done, sir. I must say, the last slide of yours, whoever attending is interested must have taken a screenshot, and if you read on to those books, those links, and can always connect back to you. And what I'll sum
I think
up,
they can always, sorry to interrupt, but yeah, I mean, if anybody is interested, they can just reach out to me. I'll share the PPT as well. I mean, they don't need to take screenshots and all.
Sure. And after listening to you for so long and going through your PPT, I would just pick up my favorite line, which read as that if all this is gibberish to you, go for a professional advice. I mean, that's one thing which will stay with me. That's the most important thing you said, that if you don't understand, don't try something adventurous. There are various things to get that adrenaline pump. Thanks a lot, sir. Thanks a lot for your time. It was a great session. You took out time. And we hope IA will conduct more such events with you regarding in various topics. So we can take up bonds in one time. We can take certain other topics also. So that coverage is given due time for its importance.
Thank you.
Yes,
Thank you, Aniket, for
definitely.
your words. Thanks,
Yes.
Shruti.
Thank you so much, Gaganpreet sir, for such a lively and interactive session. It gives a feeling of joy and accomplishment to listen to a person who has such a deep understanding of trading and investment. And I really liked your simple and practical and very insightful approach to strengthen the financial independence. Also, I thank today's moderators, Prateek and Aniket, for wonderfully facilitating this session. You made the session more comprehensive. And last but not the least, I thank audience for giving something as valuable as your time. So now with your due permission, I would now close this session. But also one more thing, we will upload this recording on YouTube so that those of us who couldn't attend the session will get access to today's discussion. Thank you very much.
Thank you. Thank you.
Thanks,
Thank you
Shruti.
very much.
Thanks.
Have a
Thanks,
nice
Gagan.
day.
Thanks, Aniket.
Bye.
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 Take care.
Bye.